Welcome everybody to the next lesson within the webinar series Learn to Trade the Market. My name Stefan Friedrichowski, as always with those webinars. And today we have the 20th of December 2016, so close to Christmas, by the way, but that you know for sure. Yeah, and thanks to Argus that they make that kind of webinar series possible for everybody of you. So, but anyhow, it's nice to have you once again within the next coming webinar. So first of all, I have to announce that the next webinar after this one here will be next year. And next year means exactly the 3rd of January 2017. Yeah, you know why? It's simply because between Christmas and Happy New Year there will be no webinar. I think that is a better decision. So within 2 weeks, you can join once again this webinar. We go directly into the topics for today, and I will start a little bit with a short recap of what we have done last week. And anyhow, whenever you have questions, just use the possibility to send me an email, and you see already my email address here on my first slide with a quite complicated last name, friedrichowski@argusfx.com, and you can simply send an email there. And if that goes too fast right now, you can download those slides I have used last week and as well as today. You can simply download via the GoToWebinar control panel, so it's easy to have that access. And then you have all the slides, and then you have my name, by the way, directly. So after going to a short recap, then what I want to do next is I want to explain you briefly what is really a CFD. That is, by the way, what we deal here. That is, all our trades are CFD trades, CFD based, and at least once you should have heard how is the definition of a CFD. I will go quickly through that, because you will later learn it. What first seems to be quite complicated turns out to be extremely easy. The next real topic then will be that I talk about stop loss and take profit of a trade. You might have heard of those two names already. What does it mean to have a stop loss? What does it mean to have a take profit? And why should we place those things? But first of all, we have to define what it is, and then how to use it. After we have introduced the concept of stop loss, then it's directly important to have a definition of how to calculate the risk of a trade, because that's not straightforward to have that kind of calculation, but you should get used to that calculation because it's extremely important. Whenever we talk about trading, it has to be related to the risks of our trades, and that is extremely important because first we have to do is we have to protect ourselves, or to protect our account, and that means that we have to be sure what risk will be involved in the trade we want to do. And I go through several examples of how to calculate the risk of a trade. So finally, you will have access to an Excel sheet about that as well. And whenever you would like to have it, just send me an email and I will share it with you. I cannot directly share it here via the control panel simply because there are only certain allowed file types, and Excel does not belong to that group of files. And finally, today I would talk about order types. Also, those you might have heard already. Order types are types like buy limit, sell stop, and something like that. And those types of orders we will use quite frequently because that enables us to already place orders for the future. So they are linked to a condition, and only if that condition is fulfilled, then a trade will be opened, and we don't have to be at our computer in order to have those trades to be opened. So it's a quite interesting methodology to have that kind of order types and that type of trading activities. So you see finally on my first slide two things. One is the YouTube channel. There all the webinars are recorded, and you can find one day later all the recordings of our webinars, so you can view them once again, or you can share to colleagues of yours. So whatever you have in mind, you can find those recordings on that YouTube channel. And finally, as always, you find the risk warning on my first slide. That is simply meant to be in a sense that whenever you do your own trading activities, you simply do them by your own, and please don't blame me for any losses within your account. But I know that you are aware of that, definitely. So first, a short recap, but just practically. So what we have introduced last week, we have installed an MT4 platform. That is our trading platform in order to open trades, close trades, and do all our trading activities. And that is exactly what you see here on my screen. We have opened a demo account, and there was already a question of how to open such a demo account once again, and I shared the link within the answer to that question. And what we have here on my screen are the 4 typical windows within MT4, and those are Market Watch, that is in the upper left corner, and there you will find all our trading symbols of interest. We will use later that window as well. So market window here, then the next one is the navigator. If you, for example, have more than one demo account or even live account, then you can connect your MT4 with a number of accounts, and then simply by double-clicking, you can switch between those accounts. The third window is a so-called terminal window, and you can find numbers like what is your actual balance, your actual equity, and if you have open trades, you would find them here as well. And when I press here, account history, you can see your own history of already placed orders, trades being done and closed. So account history is always only closed trades, and trade means your open trades. Actually, there's no open trade, therefore we don't have any trade mentioned within that window. Last thing is, of course, the chart itself, and here we have a chart of euro US dollar on an hourly base. So that means this H1 means every candle within the chart represents 1 hour of time, and every candle is defined by 4 values. It's always the open value, the close value, then we have a high and we have a low, and those 4 numbers create and define a candle, and in this case it's H1 candle, so this candle covers a period of 1 hour. So that's the chart itself, and we have adjusted the charts to our personal interests, for example, whether it should be on a black background or white background, and how those candles should look like, red, green, whatever your personal preferences are, you can manage that as well. So that was finally what we have done last week, and the last thing we did, we opened a trade, and that was simply by pressing F9 or by right-click into a chart and then a new order, and then we get here this order sheet in order to place an order. So, but we will do it later once again. So that was what we did last week. And now let's start with new things. And first of all, let's talk about CFDs. You have heard maybe about CFDs, and CFDs is an abbreviation for contract for difference. So that is, by the way, the definition of a CFD. It's a contract for difference. And I have here already included a long definition about what that really means. And you see that is a contract between two parties, a buyer party and a seller party. And whenever finally the trade is closed, then somebody has to pay for the difference. And who has to pay depends on trade direction, long or short. And it has to do with what has the actual and underlying, for example, euro, US dollar. Was it in your direction? So if you have opened a long trade, then you bought, for example, one contract. And if indeed the price has increased until you close your trade, then you have earned money, so the broker has to pay you some money, otherwise you have to pay for your trade, so it's your loss. I know the definition, and you might have read it already, sounds extremely complicated, but it's much simpler than you even think about. And it sounds complicated, but let's go for an easy example, and then you will directly understand what it means to trade a CFD. Let's consider a simple example. We want to trade the DAX, so the German underlying, the German index for 30 companies which create the DAX, and we open a so-called long trade. That means that we expect that the DAX will increase in the near future. And assume that we buy one contract at the broker Argus FX, and I'll come to that later. And the DAX has a value of 11,447. So that is a price. We opened the trade, and that was a price at that moment, and we bought one contract into the long direction. Now the next step is that we have to know for our broker, and that, by the way, differs from broker to broker, what does it mean if the DAX makes a 1 point movement? And for the broker Argus FX, for example, then the price would change by €1 if we buy exactly one contract. That means, for example, when we open the trade at 11,447, and after a minute or whatever, the DAX has increased by 1 point, so finally it would be at 11,448, then we have earned €1 up to that moment. Finally, it depends on when we close our trade. And now, second assumption. Let's assume that we, after a time, we sell our contract at a DAX value of 11,537, just as an example. So that means the DAX has made a movement of 90 points, and since 1 point equals €1, we would have made a win of €90. So our trade would have been ended with a win of 90 euros. If we would have bought 2 contracts of the DAX, then our gain would have been 180 euros. And last example, if we would have bought a so-called sell contract, so if we would have opened a short trade, expecting the DAX would decrease in the near future, then of course we would have made a loss of 90 euros. And now you see exactly that all we do here is that we trade the difference. So we have, of course, we have an open price for our trade, 11,447. And of course, we have an ending and closing price of our trade. In my example, 11,437. But what only counts is the difference between opening and closing. And that's the final reason why we call all our trading activities dealing with differences, and therefore it's the definition is simply contract for difference. So we open a trade, but to whatever price, but what only counts is the difference between close and open, and therefore everything is called contract for difference, and the win or loss of our trade is only calculated by the difference of closing price and opening price. So what originally sounds extremely complicated with CFDs or contract for differences is finally very easy, because we have an open, we have a close of our trade, and then we have a result for our trade, and it depends on the number of contracts, it depends on the 1 point equivalent, and it depends on the direction of our trade, meaning long or short. Short always means we expect the price to decrease, to go to the south. Long means we expect the price to increase, moving to the north. So that's all. And that is CFDs. And now you know what you trade. Same definition applies for any other underlying, whether we buy, whether we trade euro, US dollar, whether we trade gold or oil or S&P 500. It's in principle always the same. The difference is always the 1 point equivalent of a trade, and that will be topic in a few minutes from now. So that's the definition of a CFD. If you remember last week, we opened a trade and I said to everybody, this should be the final trade I have done in a way I did it last week, because I simply opened a trade at a certain price, and a few minutes later I closed the trade. But I have not been aware of my risk involved in that trade, and even more dangerous is I opened the trade without a so-called stop loss. But what is a stop loss? There are already 2 new wordings here. One is called stop loss, and the other one is take profit. And those 2 things, stop loss and take profit, can be set individually for every trade which is running, or later you will see even for so-called pending orders, we can already define stop loss and take profit. What does it mean if we have set those 2 values within our trade? It simply means that after the trade is running, that we have 2, let's call them thresholds, 2 lines within our chart, 2 numbers, one for stop loss and one for take profit. And whenever in the future the price of our traded underlying will hit one of those two thresholds, either stop loss or take profit, our trade will be closed automatically by the broker. And the cool thing is that this will be done even if we are not logged into our account. So it means if we can shut down our computer, if we have enabled a stop loss and a take profit for our trade, everything will be done by the broker. So we don't have to be present for that. And that means finally, especially if you think about that stop loss, that a stop loss is able to limit the risk of our trade. Because we define a certain threshold. Whenever the price would hit that threshold, the trade will be closed. And even think about a long trade and the price is against you, so price will go to the south, then there is a limit. And if that limit is reached, the trade is closed. And that is wonderful because that limits our risk of the trade. There are some exceptions. Those exceptions are called gaps. And you might have heard about gaps already. I will come to that, but I think next week or in 2 weeks. As I mentioned, that the next webinar will be on the 3rd of January and not exactly in 7 days. So there's an exception. We will deal with that later. But for now, let's state we have a defined limit for our trade, because if that limit is reached, the trade is automatically closed by the broker. The same is true for the take profit. The take profit, or the short symbol, is TP, and the short symbol for stop loss is SL. That is something like a target value for our trade, and that is for the positive side. So whenever the price will hit that target value, the take profit value, once again, the trade is closed by the broker, and we have earned a certain profit. So take profit is also a good idea, because we are not always present in front of our computer. The trade is running, and maybe we have set a certain limit, and then the trade is automatically closed by the broker, and we are in luck and can later find a certain amount of money on our account. And I strongly recommend to everybody of you, do not open a trade without a stop loss, because that would finally mean, with some exceptions, that you trade without any risk limit for whatever you trade, and that could ruin your account within a minute or within some days. That depends a little bit on your lot size, but therefore my strong recommendation is no trade without a stop loss. Stop loss and take profit are always visualized in the MT4 platform by dashed lines, and I will show it to you now as a practical example, and I hope you can understand that I once again will make a trade without already, before opening the trade, that I do not know the risk of the trade. So I asked last week already or I make a statement last week that will be the final trade, but now I do the second one. But once again, that is only for education purpose. So what I want to do is, first, I want to open a trade here. I want to place a new order. And since I have no idea of my risk involved, I trade the minimum lot size for a forex trade, and that is 0.01. And I open now a long trade directly here. Okay, therefore I press the buy button. So first thing, what you see here is that you can see a dashed green line, and that is the opening value of my trade. And now there's a trick within MT4. I have opened a long trade now, and a long trade means I expect the price should increase, and that means that the stop loss has to be below the green line, because it should limit my risk. Whenever the price goes further down and down and down and down, it would be against me, and I would want to limit exactly that risk. Therefore, I need a stop loss below the green line. And the trick is now simply that you press with the mouse the green line, and then you take it down, and you see now a red dashed line, and this red dashed line is your stop loss value. So when you release the mouse, then the movement ends, and now we have a stop loss value exactly at that level. So in numbers, it's here a little bit below 1 point. Let me see whether I can get that number directly. No, and we have the stop loss at this certain value. So this is now our stop loss, and we can define a take profit for that trade as well. And that means simply we press the green line once again, and we can move it upwards because it's a take profit. That's the value we would like to reach, and whenever that value is reached, the trade should be closed. And let's release the mouse here, and now we have a take profit as well. So that is something you can do simply by mouse clicks, or you can do it manually as well. Manually, there are two possibilities. Once again, one is you double click the green line, then you can set your stop loss in numbers within that ordering window here. So we can change the number directly by entering new values. That is one thing you can do, or you can press this upwards and downwards level if you want to change it a little bit. And then finally, you modify your order, and you see, whoops, now both lines have moved a little bit, and that means to change stop loss and take profit for a trade. Second possibility, after just double clicking the green line, is you double click within the terminal window to your open trade, and then you can change the values as well. I think it needs a little bit different. I have to do a right click and then modify or delete. Sorry for that trouble here, but that's now the right answer. So it's simply a right mouse click on the open trade and then modify or delete, and then you are done. So now we have those two lines within the chart, and the trade is still running. The price has not changed a lot, therefore we have a small minus right now. And let's see what happens to that trade due whatever we do later. So let's keep it right now here in that window. So I hope that you now understand what is the definition of a stop loss and a take profit. And whenever one of those two values will be reached, the trade will automatically be closed by the broker, and then you will find later either a win or loss within your account. So that's a cool functionality, because you don't have to be present all the time in front of the computer and manage your trades by your own. So that therefore I use those things always, and especially I have the rule no trade without a stop loss. So that's for stop loss definition and take profit. But anyhow, let's go into the next step. How can we calculate the risk of a trade? And that goes directly in line to what I have had on my slide before, that I always need a stop loss in order to define the risk of a trade. So it forces me, in order to calculate the risk of my trade, it forces me to have a stop loss value on the trade. Otherwise, you would have, it's not mathematically correct, an unlimited risk on your trade. To be mathematically correct, the risk is only unlimited for short trades, because the price can go up to a real unlimited number. But anyhow, it would mean that you would ruin your account if you don't apply a stop loss value in an appropriate way. In order to calculate the risk of a trade, we need a few things. One is we need an entry price. One is we need a stop loss value, and then we can define the risk of a trade if we know a few things further. One is the lot size, so the volume we trade. Then you will understand in a few minutes the so-called contract size, which is always 100,000 for Forex symbols. And we finally need the exchange rate. And in a way, in an appropriate way, you will directly learn it in a practical example. Let me go back to my MT4, because I can use already something out of the MT4 and I can define the risk of a trade. Let's go back to what we have here. We have an open trade visualized by the green line, and we have two dashed red lines, one for take profit, one for stop loss. Let's only look for the stop loss value, and you see what happens if I do the so-called mouse over functionality, meaning if I go with the mouse cursor directly to the red dashed line, then you see already there's a number, and the number in that small window is telling me the profit is, and now it vanishes. Let me go once again here. Then we can get the number back. And the number is telling me the profit is minus 2.51 euros. Hey, and that's exactly the answer I'm heading for. That is the risk of that trade. If the price would go south and would hit the red line, then the trade would be closed, and I will find in my account a trade with a minus 2.52. So that is the risk of my trade. So there is a formula between those numbers, my entry level, my stop loss level, and I have traded 0.01 lots. And if we combine those numbers, we should be able to calculate, like MT4 is doing, we can calculate the risk of a trade. And we should get a number of 2.51 euro as being the risk of that specific trade. Let me quickly write those numbers down. So we opened the trade at 1.03588, and we have set a stop loss value to 1.03328. I need those numbers now in an Excel sheet in order to calculate that risk by my own. And finally, and that is why we do everything here, is we should do it vice versa. That means we should first define a stop loss. We should first define the lot size of our trade so that we know the risk of the trade even before we open the trade. But let's stick to what we have done here. And now let me go simply to an already prepared Excel sheet. And now I need a couple of numbers. And I will show you how to find those numbers for all Forex pairs. The so-called contract size is always 100,000. We will see that for other underlyings we have different numbers. Gold is different to S&P 500, but let's see later. So we have currently a price level of about 1.035 in euro US dollar, and you will see later what does it mean and why I enter that number here. And we have an entry level of 1.03588, and we have defined a stop loss value of 1.03328. And we traded the lot size we have within our trade was 0.01. And now you see within my Excel sheet, the risk is calculated being €2.51. And that is exactly the same number we have had within MT4. So now we are able, with that Excel sheet, to know exactly the risk of our trade. So for example, if I would change the stop loss value to 1.032, then the risk should be increased to the number €3.75. So let me write that number down, or this new stop loss value 1032, and let's do the change within MT4 as well. And we change now the stop loss value, modify, and we want to have a new stop loss value with 1.32, and then we modify. You see the stop loss has moved downwards, and if I go with the mouse over that value, we have a value of €3.75. That the actual value always changes by a few cents during the movement of the price. Don't care about that. It's only cent moves, and it has to do with the actual calculation within MT4. But you see, now we are able to calculate the risk of a trade. So we can define a stop loss value, and we know how much money we would lose if the trade would run against us and we would reach exactly that stop loss value. You might wonder why we have this exchange rate here within my Excel sheet. Let's talk about that a little bit more in detail. And let's go to the slides. And what you see now, I want to have a new example. I want to have a trade on US dollar and Japanese yen. And finally, you will learn that if we trade US dollar, Japanese yen, we need the exchange rate euro, Japanese yen as well in order to calculate the risk of the trade. That sounds crazy, but if you really think about the trade itself, then it's you are done, because we have an account in euro, so everything has to be translated to euro values, and therefore one needs the appropriate exchange rate. So sometimes I call those Forex symbols in a way that I say, hey, they have a first name and they have a last name. So first name here would be US dollar, last name would be Japanese yen. So like my name, Stefan Friedrichowski. And what we always need in order to calculate finally the risk of a trade, we need the euro last name combination as well. And then we can calculate the risk of a trade. And the complete formula for that calculation you see here, and that is exactly the one which is in the Excel sheet I have shown you. And by the way, if you want to have it, just send me an email, then I share it with you. So now let's ask ourselves if we go for a new trade here. Let's first we need US dollar Japanese yen, and that means we have to change the symbols. And we need a new symbol, and we need the symbol US dollar Japanese yen. And we want to change the chart, so I take it and via drag and drop, leave it on the chart now. And now we have a chart with US dollar Japanese yen. And now let's think we want to have to open a trade at the current price level, and the current price level is 118.089, and it will change during our talk. And let's assume I want to have a stop loss value a little bit below here, maybe in the order of 117.75. And now we can calculate the risk of our trade if we would do a trade exactly like that. And that means we go back to our Excel sheet and we can put those numbers in. The entry price should be 118.089. I need a comma, 089. And the stop loss should be at 117.75. And oh, that sounds crazy. The risk should be 300 euros and something. Oh, no, we forgot something. We need the exchange rate euro against Japanese yen. So that part was missing. So we need euro Japanese yen as well. And let me get that symbol as well. So euro Japanese yen is within the so-called minus. And here we are. And now we can see what is the price, 122.3. We don't need the last digits here. And okay, now we have calculated the risk of that trade. So if we open a trade at that level, we would set a stop loss here. Then our risk would be €2.77. Let's try to open the trade. Oh, price has moved a little bit. Anyhow, I will still open a trade here. And now I will do something new, because I open a trade with a certain volume, and I can set already directly my stop loss value and 117.75, and it should be a long trade. And now I can press the button, and now we have our trade opened. And you see immediately that we have that red dashed line here, and we have a risk now of €2.55, but our entry level is a little bit lower, so 118.62. So if I change my final value here, then we have more or less the same risk for the trade. So you see, it's quite easy to calculate the risk of a trade by simply using that kind of Excel sheet. And the numbers involved is the so-called contract size, the exchange rate, entry level and stop loss level, and of course the lot size we apply for our trade. Let me quickly go for another example, because that changes a little bit, that you see how to get those numbers. Now I want to trade gold, and gold has a symbol XAU US dollar, and that's the symbol for gold. And what we have now new is we have a different contract size. And I only want to show you how you get those numbers. And we have already here the symbol for gold. And what you have to do is you do a right click here on that symbol, and then you go for specification. And here within the specification, you can see the so-called contract size. And for gold, it's 100. And so we would have to change within our Excel sheet the 100,000 against 100. And that would mean now we can calculate the risk for gold trades as well. So I know in the beginning it seems a little bit complicated, but believe me, it's not that complicated. You get used to that kind of calculation, but you should be able to do that kind of calculation, because only then you can calculate the risk of a certain trade, and that is what is needed for any trade. How that works, finally, let me show you a little bit here. I will change now to a so-called M1 chart, and I will place a stop loss value quite close to the actual price right now. And now let's hope, not really, that it goes south, because then you would see, hey, if that line is reached, then the trade is closed. And by the way, what you see here already in the terminal window, you can see, hey, we are already close to the stop loss value, and then you will find the number in red. And if the take profit would be near as well, then the take profit value would be highlighting in green. So let's wait a couple of minutes. Maybe we will reach the stop loss value here. And by the way, we can define a take profit as well, and that's simply by going with the mouse on the green line, and then draw it a little bit to the north, and then we have a take profit for the trade as well. Good. So that is how to calculate the risk of a trade, and that is extremely important. But that's not all for today. The last topic for today should be order types. And you have learned already one type of order, and that is the so-called market order, because that is everything I did up to now. That was, I simply have opened a trade, either a long trade or a short trade, and I did it always right now. And that is exactly the definition of a so-called market order: do it now. Formally, it means that you might not get the price which is actually shown within the chart. No, it's always meant in a way the next price is yours. The exact definition is a little bit more complicated, but let's think about the next one is mine. So there is a market order. But we have, within MT4, we have 4 different kinds of so-called pending orders. What does it mean to have a pending order? A pending order is an ongoing order, so an order which is not filled when we order. That means we place an order with a price condition. So we want to reach certain thresholds, and only if those thresholds are reached, then the trade should be opened. And we have 4 different kinds of so-called pending orders. And those are buy limit, sell limit, buy stop, and sell stop. And the meaning, I put in words here a little bit, and the meaning is quite simple. A buy limit order means open the trade, open the long trade, buy if it's cheap enough. So if the price is going a little bit more to the south, and yeah, there's my threshold, and now it's cheap enough, Now I want to open the trade, still believing that the price goes upwards afterwards. So that is a buy limit order. A sell limit is the short trade just on the other hand, on the other side. So in words, it would mean sell if expensive enough. That sounds a little bit crazy, but maybe you think, hey, that kind of underlying should go to the south. But first, it should go a little bit to the north once again, and then do the big move to the south. So therefore, I can tell it, and I can name it sell if expensive enough. And there are two other types. The one is a buy stop order. So buy if a certain threshold has been reached, or if I use the same wording as before, so buy if expensive enough. That sounds a little bit crazy because we always want to buy cheap and not buy expensive. But you might think within the chart, if the price has overcome that limit, then the way is open to the north. And therefore, this if expensive enough, that it should be the threshold to be reached, and then we go into the long direction. And same applies for the sell direction, so for short trades. So if the price goes to the south and has reached a certain value, a certain threshold, then we open our short trade. So that is a so-called sell stop order. Let's do it a little bit practically right now. And let's move to the MT4 once again. And still my stop loss is not reached here. Okay, anyhow, let's see later. But I don't want to have the same chart here. Therefore, I switch the symbol and I take Euro Japanese yen here. And I go back to an H1 chart. And now I have my chart value here. So I don't want to really discuss the chart and describe it right now, but anyhow, let's think. I draw a few lines. I draw one line here. Or let's go here. I go to the last lows here, and I go to the last high. I go a little bit higher, let's say here. And now I have two values for those lines, and let's assume that I want to open a trade to the south if the price would go below this limit, the 121.67. And I want to have a stop loss value, for example, exactly for the other red line. And now I can create that trade. Let's create that trade within MT4. We go for trading, and we want to have a new order. And now what changes here, or what we do have to change, we change the type market execution to the type pending order. That's the first step. The second step is that we can now change or adjust the type we want to trade. And in my case, I want to open a sell stop order at a certain limit. And what is the limit? The limit is this lower red line, and that means 121.67. 121.67. I write it down. And we want to have a stop loss for the trade for the other red line. And the other red line is a 122.966. Okay, I don't press the button, place the order. No, I go back to my Excel sheet because I want to calculate the risk of that trade. And my entry level should be 121.67, and now I forgot 121.67, and now I forgot the other line, 122.966, 122.966, and now I see if I buy 0.01 lots, then the risk of my trade, now it's minus because we have a short trade, would be 10 euros 60. And I can ask myself, is that appropriate, or can I increase? So maybe I'm willing to have a trade in the order of 50 euros, so I could buy 0.05 lots. And that's the order I would go for. So I changed my volume here to 0.05, and now I can place that order. Oh, I've lost my entry price. Sorry for that. So now I'm done. So now my order is set, and you see something new. Now we have a line here below balance and equity, and we can find pending orders below that line. So you see here there's a sell stop order exactly at that limit we have entered, and now that order will be opened only if the price goes through that red line. And whenever that will happen, the trade is opened. Right now the trade does not have a take profit. We have only a stop loss, but what we know is we have about 50 euros for the trade on risk if that trade would be opened. And why do I do a trade with 50 euros? Okay, my account is a 5,000 euro account, and I'm willing to risk 1% of my account, and therefore I decided for a risk of about 50 euros for the trade. Now I don't have to do anything. That means I can wait, and I can wait and maybe even wait days. And only if the price would cross the red line, a trade will be opened exactly at that limit. So we have to wait. There are even possibilities to give that kind of order an expire date, but that is something more advanced we will do later. For me, it was only important to show you how to open a pending order, and in my case, it was a sell stop order. Let's have a look once again to the different kinds of possibilities for those orders. Those four types: sell limit, buy stop, buy limit, and sell stop. Let's assume we have candles or prices of whatever underlying, like here in shown in the Excel sheet. We have a price 3 candles ago there, then 2 candles ago here, 1 candle, the actual price is maybe here. And now you see what kind of possibilities we have to place orders. Above the current price, we can place a buy stop order. That would mean price has to go upwards, hit my level, and then I open a long trade. So I expect the price should go further into that direction. I can have a sell limit above the actual price as well, because now the price goes up, 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 and it reaches that limit. And my thinking, my belief is, after reaching that limit, price goes down. Therefore, I want to have a short trade starting at that limit. On the other side, exactly the same. Buy limit order here and a sell stop order here. So that is only to visualize a little bit our possibilities. And of course, it's forbidden to, for example, if the price is here at that level, it's forbidden to have a buy stop order below, and MT4 will warn you and would not allow you to place such an order. Let me go a little bit back to my chart here, because I want to emphasize that this is those pending orders, those buy limits, sell limits, buy stop, sell stop orders are something which are very good for our trading activities. You will see and you will learn how to interpret such a chart. And out of that interpretation, you draw some conclusions. And those conclusions are exactly in a way like those 4 order types. So you might think, okay, maybe the price goes back to that region, but it will not go further. But then it's a time to open a trade to the south. And that is exactly the moment for a sell limit order. And therefore, it is good to have those order types, because they are linked to a price condition, and only if that price condition is fulfilled, and then the trade is opened. And same here in my situation, how we place that kind of order. Okay, if the price would go below the last significant lows here, then it should go further down low. That's my expectation, and therefore I have a sell stop order on the lower red line. So that's the sell stop order. I hope you got everything here up to now, and you get used to the different kind of orders. So market order we have done already for sure, and now you have learned 4 additional order types as well. Play around a little bit with those orders. Still, we are in the demo phase, so we have only a demo account, so you can place orders like you want. There's no money, no real money involved, but that is, you have to get used to, you have to get experienced with all those order types and with the way of how to calculate the risk for a trade. We go for more risk calculation next time, because we want to change a little bit that Excel sheet, that whenever we press, for example, 100 euro, the Excel sheet should calculate the lot size for our trade for given values, entry level and stop loss value. So that is only a small change, but you might do it by your own, but finally we do it together next time. And then we can try to come to first real trades through real trading activities. But still, I can only recommend play around with MT4, place orders like you want, show what happens, move around stop loss values, move around take profit values, and get a good feeling for the technique of MT4, because that is our trading tool, and you should be an expert within that trading tool, and you should be an expert in calculating risk, because that is what finally counts for your own trading activities. So I have here still a slide from same picture for the different kind of orders, and we have already 3 o'clock, so 1 hour is over. If you have any further questions, just send me an email at friedrichowski@argusfx.com. And if you want to open a trading account or a demo account, you can follow that link. I've shared an additional link already within the chat window here. And yeah, I hope I can see everybody of you next year once again. So on 3rd of January, we go further. And whenever are questions in the meantime, just send me an email. So I can say already Happy Christmas to you. Have a good Happy New Year, and see you next year once again. Thanks a lot. Bye-bye.